the Islamic Development Bank Institute. We will be honoring a living legend and a founding father of the Islamic Development Bank Institute and his contribution to the bank, to the member countries and the Ummah at large, and we will be honoring his and appreciating his commitment through the launch of a book which captures his journey and his achievements. We will be having a keynote address by His Excellency, the President of the IDB. We will also be having two very exciting sessions on the theme of the forum and the general theme of the bank partnerships for fending off crisis. So we were looking at the role financial technology can play in terms of economic resilience. We will also look at ways, we will have an exciting panel discussion on how the very popular instrument of sukuk can be further enhanced through some innovative ideas. So in light with our glorious traditions, I would like to formally start this Global Islamic Finance Forum with the recitation from the Holy Quran. I would like to invite Brother Dr. Rahal to kindly say a few verses.
أعوذ بالله من الشيطان الرجيم. آمن الرسول بما أنزل إليه من ربه والمؤمنون كلنا آمن بالله وملائكته وكتبه ورسله لا نفرق بين أحد من رسله وقالوا سمعنا وأطعنا غفرانك ربنا وإليك المصير. لا يكلف الله نفسا إلا وسعها لها ما كسبت وعليها ما اكتسبت ربنا لا تؤاخذنا إن نسينا أو أخطأنا ربنا ولا تحمل علينا إصرا كما حملته على الذين من قبلنا ربنا ولا تحملنا ما لا طاقة لنا به واعف عنا واغفر لنا وارحمنا واعف عنا واغفر لنا وارحمنا أنت مولانا فانصرنا على القوم الكافرين. صدق الله العظيم.
Jazakallah khairan, Dr. Rahal.
Dr. Rahal, thank you.
It's a partnership. There are a lot of people that work actively to make it a success. And as you know, the theme of this year's annual meeting is Partnerships to Fend Off Crisis. And when it comes to the Islamic financial services industry, it is a coalition of partners. And one of the most important partners in this coalition are the Islamic infrastructure institutions. They have been playing a role over many, many decades in creating a sustainable, robust, and thriving Islamic financial services industry, and creating the best practices, the standards, the guidelines, which help institutions and jurisdictions benefit from Islamic finance and use it for socio-economic development. One of the very important players in the Islamic infrastructure institutions is the Islamic Financial Services Board. And we have had a long-standing partnership. Obviously, IDB has been a founding father of a lot of, actually all of these Islamic infrastructure institutions. And I'm very pleased that today we have Dr. Ahmed Muhammad Ali, who initiated a project which is now coming to a full circle and a fruition. And that was the project of the 10-year strategy for the Islamic financial services industry. So this was initiated many, many years ago. There was a midterm review which took stock of the progress that has been made. And of course, with the passage of time, there are new and emerging challenges. And alhamdulillah, we are pleased that last year we initiated a project at the Islamic Development Bank Institute in partnership with the Islamic Financial Services Board to take stock of the progress that has been made and also identify the challenges that lie ahead and the recommendations that need to be made. And today we are pleased that we are launching the final review of the 10-year strategy. So in order to do that, I would like to invite Dr. Sami Al-Swalem, the Director General of the Islamic Development Bank Institute, to kindly come to the stage, and also the Secretary General of the Islamic Financial Services Board, Dr. Bello, to kindly take the stage, and we can do a formal launching of the report. I would now like to request Dr. Bello to kindly share some highlights of the report and the key findings.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم والصلاة والسلام على سيدنا محمد وعلى آله وصحبه وسلم. Your Excellency, President Emeritus, Chancellor Dr. Muhammad Ahmad Ali Al-Madani, the former President of the Islamic Development Bank, Dr. Sami Swalem, the Director General of Islamic Development Bank Institute, Your Excellencies here present, ladies and gentlemen, Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh, and very good morning to all of you. I think I have to pause a bit because His Excellency is just arriving, perhaps maybe so that I can observe the protocol more proper. You need to make the announcement or no? Right, okay. Okay. Once again, Your Excellencies, good morning to all of you, and Assalamu alaikum wa rahmatullahi wa barakatuh. I now recognize the arrival of His Excellency, the President and Chairman of the ISDB Group, His Excellency Dr. Muhammad Suleiman Al-Jasir. You're welcome, Your Excellency. I would like to maybe perhaps begin this short remark by congratulating both the Islamic Development Bank Institute and the IFSB for completing this final review of the 10-year Islamic financial services industry framework and strategy document. I would like also to express a profound gratitude to His Excellency President Emeritus Dr. Ahmed Muhammad Ali Al-Madani, whose leadership, guidance, and support as the President of the Islamic Development Bank at that time, together with those of the IFSB Council members, culminated in the issuance of this initial version of the report in 2007, and subsequently a midterm review in 2014. The IFSB is very proud of the continuous excellent working relationship with the Islamic Development Bank on many fronts, including this very important project. Allow me to therefore express the IFSB's gratitude, profound gratitude on behalf of all the members of IFSB to His Excellency Dr. Muhammad Suleiman Al-Jasir, and indeed the Islamic Development Bank Group and top management, as well as our colleagues in the ISDB, for the technical assistance and technical support that they provided to the IFSB in order to ensure the completion of the final review of this important strategic document. Your Excellencies, ladies and gentlemen, the 10-year framework and strategy document is derived from the need to continuously provide an overview of the state of affairs for the Islamic financial services industry by highlighting key opportunities and challenges, as well as making recommendations and initiatives that can drive them. The document provides overall Islamic financial services industry and specific sectoral assessment for the Islamic banking, Islamic capital market, Islamic insurance, and Islamic non-banking financial institutions. From the 13 core recommendations for the development of the industry offered in the initial document, the midterm review, as at that time, focused on 16 recommendations and 20 initiatives, and key performance metrics in order to assess the progress that has been made since the initial release of the strategic document. This final review proposed 6 additional recommendations and also identifies new key initiatives to support the implementation grouped into 3 main themes of the report, that is development, transformation, and access. Your Excellencies, ladies and gentlemen, that this document is called a final review. The fact that we call the document a final review does not in any way disregard the fact that the Islamic financial services industry itself is growing with a current worth of more than $3 trillion US. And its soundness, stability, and resilience will continue to be tested and shaped by the changing dynamics of the global financial ecosystem. The financial world today is faced with challenges of meeting the SDG targets, climate change risk, infrastructural finance deficits, inflationary pressure amidst rising debt levels, and global financial tightening, as well as hidden vulnerabilities to the effect of COVID-19 pandemic. Yet, we also notice that the financial, technological advancement and digital transformation present a delicate balance between encouraging innovation and preserving the financial stability of the global Islamic financial services industry. The final review of this document, therefore, is prepared on the premise that the strategic farsightedness is imperative and also will enable us to assess the progress of the Islamic financial services industry, and as well as appreciating its recorded success, but not ignoring both its extant and emerging challenges. Most importantly, the document tried to provide recommendations and initiatives, as well as assess the provide performance metrics in order to assess the role of the Islamic financial services industry in key global financial discourse, as well as part of the global development agenda. Your Excellencies, in conclusion of my short remarks for these important strategic documents, I would like to invite all of you to go through this document, which is available via the IFSB and ISDB Institute website to be uploaded shortly. And I would also like to update you that this document contains a lot of policy recommendations that will help you come up with guidelines and policies that will shape the future of the global Islamic financial service industry. I would also like to once again take this opportunity to thank His Excellency, the President and Chairman of the ISDB Group, and the President Emeritus for their wonderful contribution to the success since the establishment of the IFSB. We are now celebrating our 20 years, bi'iznillahi ta'ala, in Riyadh under the host of the Central Bank of Saudi Central Bank, and we hope that inshallah you'll all be there, and it will be an opportunity that this report will be digested and we'll also take it off. With that, on that note, I once again thank you, Your Excellencies, for your time, And thank you all my colleagues for your presence in launching this report. Wassalamu alaikum wa rahmatullah.
Thank you, Dr. Bello, for summarizing the work of over 10 years in a very short manner. And I'm sure that the participants and generally the Islamic financial services industry would benefit from the recommendations as they chart their way to the future of the Islamic financial services industry. So now, without further ado, I would like to invite the Director General of the Islamic Development Bank Institute and the Chief Economist of the IDB Group, Dr. Sami Swalim, for his welcoming remarks. Dr. Sami.
Bismillah ar-Rahman ar-Rahim. We are honored today to have two prominent presidents of the Islamic Development Bank. Their visionary leadership, their tireless dedication, and their impactful achievements are a source of inspiration. And I am sure that this is a very good opportunity for all of us to learn from their wisdom and from their vast experience. I am honored to invite Dr. Mohammed Al-Jasser to deliver his keynotes.
بسم الله الرحمن الرحيم والصلاة والسلام على أفضل الأنبياء والمرسلين سيدنا ونبينا محمد وعلى آله وصحبه أجمعين ومن تبعهم بإحسان إلى يوم الدين. Excellencies, distinguished guests, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome to the 17th Islamic Development Bank Global Forum on Islamic Finance. This year's forum is held under a pertinent theme: disruptive solutions for building resilient economies. Today, the world, including many of our member countries, is facing unprecedented economic, political, and financial challenges that adversely affect people's daily lives. Indeed, the dynamic nature of these challenges has put additional pressure on policymakers and other stakeholders, including us as a development bank, to explore innovative and potentially disruptive solutions to mitigate the adverse effects. The last couple of years were dominated by concerns about the COVID-19 pandemic and its impact on people and economies. Alhamdulillah, the pandemic is behind us now. However, new challenges have emerged. They include taming inflation, tackling food security, combating climate change, building sustainable energy alternatives, and addressing displaced populations due to geopolitical conflicts. We have also recently witnessed some disruptions in the global financial sector, stemming from the failure of some central banks in the US and elsewhere, or banks in general, not central banks. While the situation seems contained as regulatory authorities are actively undertaking corrective actions in different jurisdictions, the world cannot afford a repeat of the financial meltdown of 2007-2008. The call of the former president of the European Central Bank, Jean-Claude Trichet, is as relevant today as it was in 2009, when he said, "We need a paradigm change in the global economy." Ladies and gentlemen, we at the Islamic Development Bank Group believe more than ever that joining hands and teaming with partners is essential for finding innovative solutions to various challenges facing us today. This year's Islamic Development Bank Group annual meeting's theme, Partnership to Fend Off Crises, is set against this backdrop. Today's Forum on Islamic Finance is an important event to deliberate on ways to address these issues. For centuries, Islamic economics and finance principles have propagated societal welfare, ethical business practices, sustainable utilization of resources, and protection of the rights of the underprivileged. Since its establishment nearly half a century ago, the Islamic Development Bank has leveraged the principles of Islamic economics and finance to support socioeconomic development of its member countries and Muslim communities worldwide. However, we need to realize that the global economy is changing rapidly, particularly over the past few years due to modern technology, disruptive traditional business models. For example, while the advent of the internet started revolutionizing commerce at the start of the 21st century, today it has significantly progressed to include distributed ledger technologies, machine learning, artificial intelligence, augmented reality, and other technologies disrupting all facets of human life. We must embrace this disruption and integrate it within our business processes to create effective solutions to our member countries. Combining modern technologies, efficiencies, with the sustainable and ethical principles of Islamic economics can result in championing product solutions that can help tackle various global economic challenges. However, we must also tread cautiously. While disruption is the new normal, it should be embraced without compromising the soundness, stability, and resilience of our economic and financial system. Technology is a tool and an enabler. Combined with the ethical principles of Islamic finance, technology should be used to achieve societal objectives as the end goal. Any disruptive development must be backed by proper oversight, governance, and monitoring mechanisms that proactively check for potential instability issues. The goal is to ensure more effective and efficient outcomes without endangering consumer protection or risking our economic and financial systems. In this regard, I would like to emphasize the role of the Islamic Development Bank Institute in searching for innovative solutions that can help us address the challenges facing our member countries and Muslim communities worldwide. Therefore, I hope the speakers and participants today will contemplate the issues I have raised and accordingly propose suitable strategies. Once again, on behalf of the Islamic Development Bank Group, I thank everyone who has joined us today. I especially thank His Excellency, Dr. Ahmed Muhammad Ali, the visionary leader and legendary development champion who led this great institution until it became a world-class multinational development bank. We are honored to have him with us today as a mentor to all of us. I wish you fruitful discussions in the following sessions. I call on all stakeholders to keep up the collaborative spirit to develop solutions that make a lasting impact on the progress of our member countries and communities worldwide. We do not have to accept only to be good at what we do within our countries. We have to be a beacon of good financial engineering for the rest of the world, even those who do not share our faith. Thank you very much. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Thank you, Your Excellency, for your insightful remarks that we will take seriously and we will post on our website for all of us to learn and to benefit from these important insights. Now we would like to introduce the launch of the book on the Islamic Development Bank and the role of His Excellency Dr. Ahmed Mohammed Ali in establishing and leading this great organization. First, we will have a video that we would like to share with you, and then we will invite Dr. Ahmed Ali for his remarks. So let's play the video first.
Every dream has its story. Every story has a dream. Now, we tell the story of this big dream that became a reality. It all started as an ambitious goal, a revolutionary vision of global Islamic ties. In December 1973, the first Islamic Conference of Finance Ministers adopted the Declaration of Intent for the establishment of a bank to finance development projects in member countries of the Organization of Islamic Cooperation, OIC. This was how the Islamic Development Bank, ISDB, was born. Introducing the BUC, the Islamic Development Bank, and Dr. Ahmed Mohammed Ali, History of an Institution and Journey of a President. The book tells the inspiring story of the evolution of the Islamic Development Bank from a nascent idea into a remarkably successful institution that recorded exceptional achievements. The book covers the period from the formal establishment of the Islamic Development Bank in 1975 till the retirement of its first president, His Excellency Dr. Ahmed Mohammed Ali, in 2016. The bank's objective is to promote the economic development and social progress of its member countries. As the first president of the bank, Dr. Ahmed Mohammed Ali had the task of building the new bank into a world-class multilateral development financing institution. What a huge task this was, and what a great success the institution has been. Through the dedication of the first president, the Islamic Development Bank was able to start on a strong footing, with financing operations beginning in the first year. A $7 million for the Song Lulu hydroelectric dam project in Cameroon became the first project financing approved in 1976. Gradually but steadily, the ISDB Group cumulative approvals continued to grow, reaching $122 billion by the end of 2016 for 9,358 operations and projects, covering a variety of sectors: infrastructure, agriculture, education, industry and mining and health. The achievements go beyond projects to include achieving about $17 billion in total assets as of 2016, effectively from zero. Consistent AAA rating by major rating agencies since 2002. Growing from one entity only, the bank has expanded into a group of 6 entities. Number of member countries grew from 23 in 1975 to 57 in 2016. Staff strength rose from 51 to 1,000 plus staff in the group. From having the headquarters office alone in Jeddah, the bank now has 9 regional hubs across Africa, Asia, and Latin America, supporting the execution of major development projects in member countries. The bank has managed the KSA project for utilization of Hadi and Adai since its inception in 1983. Scholarships awarded to 13,000 students and scholars as of 2016 from member countries and Muslim communities in non-member countries. Many of these students and scholars went on to become leaders in their countries and communities. It takes great people to build great institutions, and key leaders have already acknowledged the greatness of Dr. Ahmed Mohammed Ali.
Dr. Ahmed Mohammed Ali will continue as a source of inspiration over the years for all of us. I'm honored now to invite Dr. Ahmed Ali for delivering his remarks.
الرحمن الرحيم. الحمد لله رب العالمين، وأفضل الصلاة وأتم التسليم على خاتم الأنبياء والمرسلين وعلى آل بيته وصحابته أجمعين. معالي رئيس مجموعة البنك الإسلامي للتنمية الدكتور محمد سليمان الجاسر، أصحاب المعالي والسعادة محافظي مجموعة البنك الإسلامي للتنمية والمحافظين المناوبين، الإخوة والأخوات، سلام الله عليكم جميعا ورحمته وبركاته، وكل عام وأنتم جميعا بكل خير، وتقبل الله منا ومنكم جميع أعمالكم الموفقة في خدمة الأمة. ويسرني كل السرور أن أشارككم في هذه المناسبة القيمة ضمن فعاليات المؤتمر السنوي لمجموعة البنك الإسلامي للتنمية، وأتقدم بصادق التقدير وبالشكر أجزله لمعالي رئيس مجموعة البنك الإسلامي للتنمية، ولكم جميعا ولمعهد البنك الإسلامي للتنمية على تنظيم المنتدى العالمي للتمويل الإسلامي الذي كان ولا يزال يسهم في نشر الوعي بمبادئ التمويل الإسلامي وتطوير الحلول التطبيقية من أجل تحقيق أهداف التنمية المستدامة لخدمة أمتنا المجيدة. معالي الرئيس، أصحاب المعالي والسعادة، أيها الإخوة والأخوات، وكما تعلمون يتم البنك الإسلامي للتنمية هذا العام 48 عاماً منذ تأسيسه رسمياً في أكتوبر عام 1975 ميلادية. لقد بدأت مسيرة مؤسستكم البنك الإسلامي للتنمية بفكرة تبناها المغفور له جلالة الملك فيصل بن عبد العزيز آل سعود طيب الله ثراه، ثم تحولت بفضل الله ثم بفضل جهود المخلصين من أبناء وبنات الأمة إلى صرح شامخ يمتد من شرق العالم إلى غربه، يقود مشاريع التنمية في 57 دولة من الدول الأعضاء، بالإضافة إلى 78 مجتمعاً من المجتمعات المسلمة من خارج الدول الأعضاء. وكما تعلمون، لقد بلغ مجموع الاعتمادات المالية التي رصدها البنك لتمويل مشاريع التنمية منذ قيامه حتى نهاية عام 2022 ميلادية أكثر من 170 مليار دولار. وقد نجح البنك ولله الحمد منذ 20 عاماً في الحصول على أعلى تصنيف ائتماني AAA، ولا يزال بحمد الله جديراً بهذا التصنيف الرفيع إلى هذه اللحظة. معالي الرئيس، أصحاب المعالي والسعادة، أيها الإخوة والأخوات، يحق لنا جميعاً أن نفخر بهذه الإنجازات وغيرها كثير. وعلى رأس قائمة الإنجازات تلكم الثقة التي نجحت مجموعة البنك الإسلامي للتنمية في بنائها مع الدول الأعضاء على أسس متينة راسخة. إن ثقة الدول الأعضاء بمؤسستكم هذه وإيمان العاملين والعاملات فيها برسالتها السامية وبواجبها تجاه الدول الأعضاء هي من أهم ما يفخر البنك بتحقيقه، لأنها هي الأساس لكل مشاريع التنمية. كما أن رأس المال البشري هو أهم مقومات التنمية، والثقة هي عماد رأس المال البشري. معالي الرئيس، أصحاب المعالي والسعادة، أيها الإخوة والأخوات، لقد شهدت مسيرة مجموعة البنك على مدى العقود الماضية هبوب الكثير من العواصف والزوابع على منطقتنا وعلى العديد من مناطق العالم. وبالرغم من ذلك استطاعت مؤسستكم مجموعة البنك الإسلامي للتنمية بفضل الله أولاً، ثم بفضل الثقة التي اكتسبتها لدى الدول الأعضاء، تجاوز هذه العواصف والاضطرابات بأقل قدر من الأضرار والآثار السلبية. بل الغالب أن المؤسسة كانت تخرج من كل أزمة بثقة أكبر ودعم أقوى من قبل دولها الأعضاء. معالي الرئيس، أصحاب المعالي والسعادة، أيها الإخوة والأخوات، إن رحلة البناء مسيرة طويلة تكتنفها الكثير من الصعوبات والعقبات والتحديات، ولكن ثمار هذه الرحلة تستحق كل هذه التضحيات وأكثر. وأنا على يقين من أن قيادة مجموعة البنك الإسلامي للتنمية والعاملين والعاملات فيها ستواصل تلك المسيرة الناجحة، وستنقل المجموعة إلى مستويات أعلى وآفاق أرحب بإذن الله تعالى. ختاما أشكر معالي رئيس مجموعة البنك على جهوده المتميزة في دعم مشاريع التنمية التي تقودها المجموعة في مختلف بقاع المعمورة. كما أشكر قيادة مجموعة البنك على دعم جهود إخراج هذا الكتاب الذي يوثق مسيرة هذه المؤسسة العريقة. وأخص بالذكر المؤلفين الدكتور مروان سيف الدين والدكتور منصور بن فتن على جهودهما القيمة في تأليف الكتاب ودعمه بالوثائق المهمة. كما أشكر الإخوة القائمين على طباعة ونشر الكتاب من معهد البنك الإسلامي للتنمية. وسلام من الله عليكم جميعا ورحمته وبركاته.
نحتفل بتسليم الكتاب.
Thank you very much, Excellencies, for your inspiring statements and speeches, and I'm sure they will provide us the enthusiasm and the motivation to continue the good work. And alhamdulillah, the foundations that Your Excellency has established, it will give us strength to build from strength to strength under the new leadership, and inshallah play a role in the development of the member countries and the Muslim communities. As you know, the theme of this year's annual meeting is partnerships. And given the tasks and challenges that we face, it is not possible to go alone to address these, despite no matter how many we are, there is always room for greater collaboration and cooperation between partners. And alhamdulillah, we have been fortunate today in the success of this global forum to have the partnership of 3 institutions of academic excellence. And we would like to honor them and offer our token of appreciation for the collaboration and support that they have provided. So I would like now to request Dr. Sami Swalem, the Director General of the Islamic Development Bank Institute, to kindly come to the stage. And I would like to invite our first partner from Iffat University, Dr. Usma Javed, who is the Acting Dean of the College of Business, to kindly come to the stage and receive a token of appreciation from the Director General. I would now like to request Dr. Hatem Aqil from the University of Business and Technology to kindly come to the stage and receive the token of appreciation. And last but not least, I would like to invite Dr. Kevin Cullen, who is the Vice President of Innovation at the King Abdullah University of Science and Technology, to kindly come to the stage. I would like to thank once again all the knowledge partners for their support and contribution. And as you can see, on a Friday morning in Saudi Arabia, we have the attendance is indicative of their support and your commitment. So I would like to thank everyone who's here once again. And also like to assure you that, alhamdulillah, we have arrangements for Jumu'ah. So there is going to be prayer available on the first floor at the Ritz. So inshallah, rest assured that inshallah arrangements are in place. So without further ado, given that we are pressed for time, I would like us to move very quickly to the first session. And I would like to invite the moderator, Dr. Hilal Hussain, to kindly come to the stage. You can please have a seat. I would also like to invite Dr. Walid Hamoud to kindly come to the stage. He is the Chairman and Managing Director of Guidance Financial Group and also a Board of Trustees of the Islamic Development Bank Institute. I would also like to invite Mr. Rami Al-Karami, who is the Executive Chairman of Avenue Normal Ventures and a board member of the Islamic Development Bank Institute. And lastly, I would like to invite Mr. Peter Holden, Dr. Peter Holden, to kindly come to the stage. And please take his seat. He is the Chairman of Beyond Limits. So over to you, Dr. Hilal.
Thank you very much, Brother Yahya. Bismillah wa salatu wa salamu ala Rasulillah. Your Excellencies, distinguished guests and speakers, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. Please allow me to do a presentation on what's called digital voucher. So this is, in simple terms, this is a very sustainable digital system for financial inclusion and social finance. problems and government approach to the category in achieving whereby the government and institutions they engage with first, they do not have the appropriate system in place to help them monitoring and verifying the traceability of this aid. Second, there is a high potential for the existing of black market whereby this vouchers representing the aid will be exchanged for cash. Third, but not least, the existing solutions for these problems are not efficient enough to support financial inclusion. So we thought of what's called as the digital voucher as a solution to these problems. In simple terms, it's a digital token, like money, but it's not money, that's built on blockchain technology and designed to bridge the gap between underutilized resources and underserved groups in society. So this voucher do not only support the targeted group to enhance their financial inclusion, but also it supports the domestic SMEs, small medium enterprises, that provide services to these beneficiaries. It has key features. Some of the features, first, it's built on what's called permissioned blockchain or permissioned decentralized distributed ledger technology. The transactions and identity of the users are secure. It means are authentic and are verifiable. Second, they are targeted. So thanks to the combination relationship between blockchain technology and artificial intelligence that give us the benefit to effectively serve targeted group and enhance their financial inclusion and stimulate the domestic economy. Third, they are flexible. So these vouchers can be exchanged for goods and services and as well as for formal currency through a dedicated exchange platform. These vouchers do not compete with the formal currency because the blockchain network will ensure that these vouchers are strictly domestic and cannot be exchanged for foreign currency simply because these are programmable vouchers. So in brief, it is a voucher that's sum of tokens issued by the government authority to the beneficiaries and to pay for the service providers. The same token can be used in this aspect, and also it can be redeemed for cash, as I mentioned. It built an ecosystem of different stakeholders. We have the government authority or the institutions, we have the beneficiaries, we have the service providers, and we do have the donors. Definitely, ecosystem platform is needed to facilitate the trading between the beneficiaries and the service providers. A currency exchange should be governed by a stabilization system, and therefore, in the institution, we thought of developing and designing a new system to stabilize any crypto value. It could be a crypto token, it could be central bank digital currency, any crypto token, any token or any value that's built on blockchain could be stabilized in an efficient way, but also innovative, inventive way. So we thought of building something called SSS, Smart Stabilization System. Now we have a patent pending for this system, and it's meant to make sure that this, in the exchange process, this is a stable token. The funding of the digital voucher can be done through two sources. One, government budget allocated to the eligible beneficiaries, but not only this, also charity, sadaqah, cash, waqf, could be used to also fund the voucher. So talking about talking about the cash waqf fund, this cash waqf fund can be thought of as a tradable waqf token or certificate that allows donors to be to be waqf contributors, either permanently or temporarily. Last but not least, this is, alhamdulillah, as I mentioned, it's a patented solution by the institute in Singapore, and now we are filing the same patent in different countries to ensure it's protected. But this is not the only one. We do have other patents as well, and as I mentioned, the stabilization system, which has a very high potential, it is now patent pending. We are doing this to ensure that we have something innovative, inventive, practically applicable, and it can move to the implementation. So we are taking some of the research outcome of the institute, translating this into something that could be workable on the ground to create an impact as directed by the president of the bank. With this, I finish my presentation. Thank you very much. Wassalamu alaikum wa rahmatullahi wa barakatuh. Sorry, for the questions, because of the time, now we will have a panel discussion, but for the questions, we can take it via email. Mahmoud will be sharing the email address here. Thank you very much.
Okay, so now we will start the panel discussion. We'll start with the questions first with Dr. Hamour. Hello. We need to display the profile. So Dr. Hamour, we know that you are an expert in blockchain-based financial platforms. What do you see as the most critical consideration for the design of any digital voucher system from your perspective?
Bismillah ar-Rahman ar-Rahim. The way I understand the proposal, which is, I believe, very, very interesting, is that it's addressing a challenge of what I would call the grant economy or the gift economy in terms of efficiency. So this is the tabarru'at versus the mu'awadat. The gift economy can be resource inefficient when gifts or grants are given in kind as opposed to money, because they're not necessarily allocating resources to their best use. And the challenge that's being addressed is how to create a market to bring the efficiency of mu'awadat into the tabarru'at and reallocate resources efficiently within the grant economy. So when is it that grants are given in kind rather than money? It's two examples: targeted policies to specific sectors, agriculture or what have you. Or in the case of the Islamic tradition, zakat, merchants who have inventory and little liquidity cannot transform their inventory into cash and therefore have to donate their inventory to people who may not necessarily have the best use for them. Now, creating in exchange a market for granted goods and services can be very challenging, expensive, heavy, and so on. And this is where the technology of blockchain and digital vouchers, I believe, is playing a role of efficiency enhancement and enablement. Now, distributed ledger technology is essentially a technology that moves all transactions to the front end, meaning you possess your own assets and transfer them without intermediation, making them radically simpler than any back-end driven intermediated system. And I think that's the root of its radical simplicity, but efficiency, cost effectiveness, very light regulatory requirement because you eliminate the conflicts of interest of intermediation, and also the network effect that it creates, the powerful network effects that it creates. Now, any financial platform of this type is built on a cornerstone of a payment system. And the digital voucher concept that is introduced in this proposal, in these patents, is really a payment system that I think is extremely valuable. As you know, a payment system has to be interoperable and compatible with conventional formal money. How to make it interoperable? The usual solution is stablecoins. Stablecoins are essentially a digitization of conventional money. But they carry into the blockchain, the decentralized, non-intermediated finance world, all the heavy banking, regulatory baggage, if you will, of conventional money. Now, what digital vouchers do is separate the entitlement of holders to certain rights, like I can redeem it, from the liquidity available to convert these vouchers into conventional money. That separation is both functionally and from a regulatory point of view, extremely flexible. And I think it's a much better model than stable coins more generally for distributed financial platforms. So I'm very happy with the concept that's being produced, and I think this is strategically where it should be going. Now, of course, interoperability is very important. Permissioned blockchain, we need to qualify grantees, is very important, and that's a re-centralization. The gateway for conversion of digital vouchers is a re-centralization. What's very important in the design is, as they say, not to throw the baby with the bathwater. The re-centralization has to be targeted without reintroducing a full back-end system. So it has to be surgically introduced and keep the advantages of the blockchain.
Thank you. Thank you very much, Dr. Hammour. Very insightful. I think now we can move into the innovation part, because we're talking about an ecosystem whereby there are many opportunities. Mr. Rami Al-Karmi, as an expert in disruptive innovation and exponential business model and fintech, number one, where do you see the opportunities in the digital vouchers? Number two, how do you think that relate and coexist with what we hear about the research and deployment of the central bank digital currency in many, many central banks all over the world?
Bismillah ar-Rahman ar-Rahim. Thank you, Dr. Hilal, and I'm both pleased and humbled to be present on this amazing panel and during this lovely event. Let's start by looking at the digital voucher as within the lens of, as you mentioned, disruption, ecosystems, because this exists within an ecosystem, and the question of trust, because if I want to follow up on Dr. Hammour's comments with the stable coin and even with the CBDCs today, the disruption in money is happening, and everyone is looking at different vehicles of how do you achieve that. Central bank's vision is CBDCs, and this comes in with its own pros and cons. Now, I remember I had a task that was looking at implementing a CBDC in a certain country, and I remember the keyword they used. They said, if we roll out CBDC, if you're rolling out a system and discover a failure, you just shut it down. But if you roll out CBDC, there's no shutting down. There's money that's floating, and there's a huge issue that you need to tackle for rolling it back. However, with the digital vouchers model, there is a very interesting model that can be introduced as a segue towards CBDC's implementation. You can, of course, depending on the use case and how you apply it, you can consider this a special form of a stable coin, where it's even superior with introducing, be it artificial intelligence or the smart stabilization system that allows you to control and minimizes risk. We've heard of the numerous stories of how stable coins there are lots of failures out there on the types of implementations of how stable coins went out. Yet here with the digital vouchers, we have an amazing opportunity that we can untap by applying all those models together. Also, there's the question of DeFi, decentralized finance, and what are the vehicles today that allow you to utilize such technologies out there while making sure you're Sharia compliant and you don't go through the risks of whatever cryptocurrency or stable coin you're using to go through DeFi. Having a digital voucher model can be your contained translation model, if you may, that allows you to access those tools, yet provides the trust and comfort before having to go through the other risks out there. I think the final point there is also, which is what allows the digital vouchers to be superior, in my opinion, is having this the smart contracts, the programmable money model, which can untap huge potential by allowing a developer community out there to just build more and more use cases. So you can, again, at the end of the day, we've seen how many nations have been trying to tackle financial inclusion and social funding, and no matter how much I've seen use cases out there trying to tackle them, we haven't seen those disruptive approaches that have those exponential tractions in terms of how you apply financial inclusion. Yet here with programmable money, allowing digital vouchers to become your translation model, if you may, between fiat, CBDCs, and what have you, I think there's a tremendous opportunity to look into really disrupting or exponentially growing financial inclusion and social funding.
Thank you very much, Mr. Rami. This is very insightful as well, because we start with the design considerations all the way to the innovation, but many things mentioned, including risk, including interoperability issues, privacy issue. Now we need to listen from the AI expert, Dr. Peter, from AI and its relationship with the distributed ledger technology and other solutions that we know that's like now is like floating in the space. How do you address some of the issues and concern when it comes to the actual implementation of the digital vouchers in practice?
Thank you. And first of all, it's a great honor to be invited here today, and thank you for attending today, even though it's Friday. So first of all, I've been investing and setting up AI companies for nearly 30 years now. And what's interesting is that, first of all, AI is not a product. It's an enabler of improved business process, industrial processes, enterprise processes. And it's not just one tool. It's a number of tools, and those tools can be used in different ways. Over the years, AI has evolved from being used in the darkest corners where data scientists and AI engineers used it, to now being with a very low, easy, intuitive interface that everyone can use it. And so the social, legal, cultural impact of AI is greater and more profound than it's ever been. So the role of AI for digital vouchers is very simple. It's to ensure that the right voucher reaches the right end user for the right purpose and for the right motivations. It's as simple as that. And we're seeing some very interesting trends in AI, new technologies, but actually almost all of these AI technologies process data, whether it's pattern matching or whether it's generating new data from historical data. ChatGPT, which is hysterical in the media attention right now, but does have a role. So they all have different purposes, and I'm going to just highlight some of those roles now. But what we're finding with data-only AI is that it's not enough in the real world, the messy world, where things happen with uncertainty, with dynamic changes, with no data or too much data. And so there's a trend, even the strongest advocates in the industry, towards neural networks and generative AI and machine learning and deep learning, are saying we need to go to the next stage of AI, which is to encode human-like common sense and intelligence. And that's called symbolic AI. It will look to most people like a set of rules. But you need to combine that symbolic AI, which provides systems with independent reasoning and logic to think on their own 2 feet rather than just process data, and combine that with the best of machine learning and deep learning.
The digital vouchers and other use cases related to the actual end user. Now, the trick is how can you create a community of developers or a community of innovators that can and have a system design or an architecture behind the system that allows generation of digital vouchers depending on certain use cases. So instead of hard coding the process of building a digital voucher, you can have a low-code model behind it, or a certain approach that allows for generation per use case and what have you. And then based on that, you unlock the potential of innovators that can come in and apply different rules using AI or certain geographies or certain time, and based on that, just seed in the few use cases that we explored, and then allow for different nations and different countries and different communities to custom build their own use of how to use the digital vouchers. The beauty of it is if you have a sandbox environment that looks at how do you do that, how do you roll out, how do you design, and what have you, this will allow innovators to play along with the technology, yet you maintain control on what goes live after approving and reviewing those solutions. And even you can design models around providing incentives to the developers that come up with real use cases that make sense. Because as we speak today, again, we're living in a volatile, disruptive point of time where I don't think we will be able to comprehend the type of challenges out there that require specific solutions. Using this, we can unlock the potential of people who know the pains on the ground and have the ability to identify what are the real solutions that are needed and build on that. That does not discount seeding those with a number of use cases that are really clear and interesting in financial inclusion and social funding. Yet, the design today with its superior components as a framework, I think is well positioned to unlock the potential of an innovation-led ecosystem behind it.
Thank you very much, Mr. Rami. I totally agree, because we know that أهل مكة أدرى بشعابها, so definitely those who will bring the use cases that really tackle the issues that they are facing. Dr. Hamoud, as an Islamic finance practitioner, what do you see the actual potential of the contribution of the digital voucher in the Islamic financial industry?
I think what's important to understand is that putting aside the unfortunate speculation around cryptocurrencies that I believe will fade out as just a blip in history, the technology of what I would call distributed financial platforms and the role of digital vouchers as payment instruments on them, I believe is the ultimate digital transformation of finance. Fintech has been an effort at essentially eliminating, dematerializing certain financial processes or delivery systems. Distributed financial platforms eliminate financial intermediaries and turn financial systems into front-end, practically front-end only systems that scale up the way big tech has scaled up and disrupt the way big tech has disrupted and create network effects in this way. And I think, beyond the specific area of application of the grant economy that we spoke about, this technology is going to be critical for the future of Islamic finance. And I think if we want to understand the future prospects, we need to go back to history. Islamic banking and finance emerged in a context where the predominant modern money and banking system was based on commercial lending, which is abhorrent to the Islamic values and Sharia. And what it did is to transform this idea that money is the twin of the issuance of money is the granting of a commercial loan. That's what modern money is. is to transform that into another instrument that is loan-like, but is more like a debt instrument or ijara instrument and so on. And by doing so, it has alleviated many of the issues, including ethical issues, disruptive of commercial lending. But it has developed within the cage of modern money, which still imposes on us a debt-based financial system. And I think, I mean, Dr. Sami is in front of me. He's written maybe the most articulate chapter in his book on the restrictions of Sharia, the limitations of Sharia on debt finance. This is not the ideal system for Islamic finance. And I genuinely believe that if you look at the history of our modern money and finance system, what you realize, this is not a law of nature. This is not a perennial, unavoidable way of organizing financial payments and economic activity. It is a system that emerged historically about 300 years ago, specifically in 1694 through the creation of the Bank of England as a private company chartered by the English Parliament that essentially created bank money as a way of channeling funds to finance the English state in its wars. That's modern money and its inception. Now, it was a very disruptive technology. It was copied by the French very quickly because that was the other side that was warring with England at the time. And then it spread in Europe, and then beyond that, through what's been called the mother of network effects. That's really modern money around the world. Now, going back to a pre-modern money system has been practically impossible until the emergence of distributed financial platforms, which have the potential to disrupt the disruptor, if you will. And it was based on the idea of digital gold, which is a pre-modern monetary form, but that is radically simpler than all of the clearing and settlement and what have you systems that the banking system today has to deal with. And I believe it can create a turf, a space within which the true values of Islamic finance can truly flourish. Not a disruptive space per se. I think it's a transformative space that can live in harmony with the modern payment, money, and financial system. I don't think the idea is simply to displace, but really to discipline and create alternatives. And I think I am convinced that this is going to be a very powerful tool for the flourishing of a new way of breaking out of the cage, if you will, of modern money for people who are working hard in developing, in expressing the values, the true values of Islam in the world of the economy and finance. And personally believe that it is a collective responsibility, fard kifaya, on us to support the development of Islamic value-based finance based on this new technology.
Thank you. Thank you very much, Dr. Hamour. You mentioned out of the cage. This is the approach we're following in the Institute. When we first learned about Bitcoin and blockchain, actually it was a collaboration between so many experts around the table to bring in something. They did not bring anything new. They just brought what's currently available in the industry in terms of math, in terms of economy, in terms of even cryptography. Everything was there, but just sit together to discuss and solve one problem. And this is, I think, the approach way forward to solve many problems in the industry. Now, when we mention digital voucher, it's a crypto-based system, and it's of any digital value, and Sukuk is not an exception. Maybe, inshallah, in the next session, our colleague will talk about the Sukuk, and Sukuk could be also a crypto-based Sukuk, inshallah. Thank you very much. Thank you for everyone, and thank you for attending the session. Although it's Friday, so hopefully you got some insightful information. Thank you.
the panelists for their very insightful and thought-provoking ideas and discussion about the role of technology and how it can help in terms of leapfrogging, financial inclusion and access to finance. We would now move very quickly to our second session. I would like to invite Dr. Hilman Izhar, a senior economist with the Islamic Development Bank Institute, to kindly take his position as the moderator. I would also like to invite Dr. Suminto, who is the Director General at the Ministry of Finance, Indonesia, to kindly take his place. I would like to invite Sister Sabine Salim to kindly come. She's the CEO of Islamic International Rating Agency. And lastly, I would like to invite Brother Ijlal Alwi, who is the CEO of International Islamic Financial Market. Over to you, Brother Hilman.
Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh. Very good morning, late morning rather, but early afternoon. And first of all, thank you so much for having us and for attending the second panel session as part of the 17th Global Forum for Islamic Finance. And we all know that today and tomorrow are the weekends in this part of the world, and for that we are extremely grateful for your patience that you are still around. The subsequent session or the current session will be primarily talking about the Sukuk Enhancement Fund, and as a matter of fact, this is the product that we have been working on for quite some time, and we have been working tirelessly in terms of trying to make sure that the idea makes a lot of sense from many different perspectives. And hence, we have been in the brainstorming session with so many different relevant stakeholders that includes the Ministry of Finance, from selected member countries, from the selected standard setting organization in the Islamic financial service industry, as well as the Ministry of Finance in some member countries as well. And my primary role in this session is mainly as a moderator, but obviously we have to have something to discuss about. And for that reason, I will be shedding some light on what we have been working so far, namely the Sukuk Enhancement Fund. And for your information, that the detailed concept paper and discussion paper has been circulated to our panel experts. And so we are confident that they have gone through in a very detailed and painstaking manner to have some, mashallah, later on. We expect to have a very good feedback so that the discussion will be very fruitful. Before I start my sort of a brief presentation, again, thank you for the panel expert, Dr. Suminto, for coming all the way from Indonesia. I know it's not a short journey, but in the end you made it. Thank you very much for that. And also Mr. Ijlal Alwi, everybody in the industry should know him or would know him, as one of the key, in fact, the CEO of the standard setting organization in Islamic finance industry. And the work of IFM is mashallah, very formidable, and it's been very influential so far. And last but the least is one of the brightest minds, to say the least, from Sister Sabine Salim, and we have engaged with some of discussions with her as well previously, and we have been benefiting a lot from her insight. The objectives of what we call as the Sukuk Enhancement Fund is to enhance the diversity of Sukuk markets, because at the end of the day, with the era of the so-called debt and then leading to financialization, we try as much as possible with the existent later on, if it is going to be very applicable, we would like to see the market to be more diversified, and in terms of so many different aspects, from the issuer's perspective, from the investors, as well as from the structures as well. And we thought that the Sukuk Enhancement Fund that we come up with is or can be customized for different sort of sectors, and one of which is for the SMEs. And obviously to enhance the transparency, the governance, because obviously with the certain level of diversification, we really hope that consequently, the certain level of the governments can be ensured as well. And plus, if the structure is more diversified, consequently, perhaps, hopefully, it will make the system more resilient as well, rather than relying primarily upon the debt structure. So some of the features of our Sukuk Enhancement Fund is it will, in fact, it gives what we call as the partial protections to Sukuk investors. So in a nutshell, if we try to sort of envisage the key players in the Sukuk Enhancement Fund, we have the investors, we have the issuers, we have the fund itself, as well as as part of the structure, we have the capital provider as well to make the entire structure more robust. We thought that it will give no additional cost to issuers. Plus, the unique part, we really believe, and based on our kind of ongoing discussion with key stakeholders, that it will potentially allow the fund to give some kind of a portion of dividends to the transacting or parties as part of the Sukuk Enhancement Fund. So investors receive fair returns given the level of risk, and fund is therefore self-sufficient. Why? We will explain later on. No external guarantees needed, hence no external insurance. And the capital provider, as part of the so-called, if we can use the word ecosystem within the fund mechanics, is that they will also receive the competitive returns. So some of the due diligence, this has been one of the issues in making sure that those who are involved in the transacting parties are not sort of having moral hazard that will be eventually uncontrollable later on. Therefore, having the fund is supposed to exercise this part of the role, due diligence in accepting the members of the fund. Applicants must be statistically independent, if we can use that word. The likelihood of distress, of default, must be reasonably small. And by the way, in our sort of analysis, as compared to before, we expanded our analysis by having not only the state of distress, but also the state of default as well. SEF, or Sukuk Enhancement Fund, we really hope that it also mitigates the informational asymmetry. Again, a bit of a technical terminology is that essentially we will provide two types of protection. We call it, first is the vertical protection, and the second one is the horizontal protection. What we really mean by horizontal protection is to protect the number of members in the fund, whereas the vertical protections is the protections of the sort of installment. And therefore, within this limit, we really believe in the model. The fund itself is self-sufficient due to the horizontal and vertical protection. So again, events of compensation up to 50% of affected installments, and please don't worry about this alpha, this thing, but essentially the alpha is the horizontal protection, while the alpha prime is the vertical protection. Therefore, consequently, the fund itself will be not depending upon the external guarantee. Okay, so in other words, it will be self-sufficient. So value of distress relief. In case of distress, the issuers may fail to pay one or two installments. Whereas without the fund, distress may transform into the default. With SEF, therefore, the issuer will have room to arrange its financial position and survive to distress. And SEF reduces the probability of default as a result. With respect to the credit risk of Sukuk Enhancement Fund, members pay the contributions at the beginning of each year. So if a member is in distress or default, they will not pay. Therefore, to avoid this kind of risk, the fund can raise the capital. And capital is equivalent to the total contributions of 4 years, and capital plus contributions of the first year are paid on day one. So this will make the the fund quite robust from day one. So in terms of the deficit, extensive analysis has been conducted, as I mentioned earlier, under different type of scenarios. As compared to the previous version, we have expanded the scenarios from the distress only. Now it includes the default state as well. So the deficit occurs only if the pessimistic scenario in case of combined default and distress. So deficit can be well covered by capital and withheld dividends. And given the low probability of such an event, the risk facing capital provider is very low relative to the gross return they get, so around 10%. So in conclusions, we believe, at least we are confident, that the SAF is feasible. The key roles of the fund, number one, to reduce informational asymmetry, right? And create an arrangement for sharing the risk and enhancing the credit worthiness of Sukuk. And we also think that we saw this kind of gap in the industry. So hopefully if it is going to be applicable, we'll see, inshallah, then hopefully it will be filling the gap in terms of, especially in the capital market. So that will the end of my brief presentation about the concept of Sukuk Enhancement Fund. But next is I will engage with some of our panel experts. First, I think we would like to go with Dr. Suminto. A bit of the introduction. Dr. Suminto is pretty much a well-known figure, particularly in the Republic of Indonesia. And currently, Dr. Suminto is the Director General of Risk Management and Financing at the Ministry of Finance, Republic of Indonesia. And I think Dr. Suminto as well is not a stranger to the Sukuk, particularly in the Islamic capital market in Indonesia. Correct, Dr. Suminto? So the first questions. What is your first impression when you went through the document of SEF? I think we start with that first. Tafadhal.
Thank you, Brother Ilman. Assalamualaikum warahmatullahi wabarakatuh. In respect to the questions, if I refer to the experience of Indonesia, you know that in respect to the Sukuk issuance, the issuance of the sovereign Sukuk is very much developed, in which our Sukuk outstanding now around 85 billion US dollar equivalent. We issued both in the global market and domestic market. But in respect to the corporate Sukuk, it is very difficult to develop, in which currently the outstanding of corporate Sukuk just around 5 billion US dollar. So, the infrastructure needed to develop further corporate Sukuk is very much important. And of course, credit enhancements, guarantees, insurance is one of important market infrastructure needed. So that from philosophical and conceptual side, when I show the concept paper, it is justified. Yes, we need such kind of mechanism. Then the question will not in the conceptual side, but in the practical side in respect to the applicability. For example, in respect to the guarantees of Sukuk issuance or conventional issuance in the region, for example, we are in ASEAN, we have credit guarantee and investment fund established by ISDB and ASEAN +3, for example, which provide guarantees to the issuance. especially for the corporate issuance. It is just a normal mechanism in the market. The same situation with the Sukuk Enhancement Fund. Conceptually, it is right. But the question will be the technicality and the applicability first. From the conceptual paper, I show that the concept is a kind of cooperative mechanism in which the potential issuers then contribute to the fund. Could also invite capital provider to contribute. And then by this fund, developed guarantees will be provided, right? The question number one, who will be involved? If the members, in this respect, the issuers, is those who have lower credit ratings, meaning that the fund is established by lower issuers, so how the fund could get good credit rating? Because the credibility of the fund and the ability of fund to enhance is depend on the rating of the fund itself first. Second, in respect to the incentive mechanism from the issuer side, they could choose in respect to getting enhancement whether they establish such kind of SEF or simply just using the existing guarantees provider like CGIF or IFC or other private guarantees companies. Of course, cost matters, right? I do understand that by getting enhancements, not necessarily should be have lower costs. But sometimes, especially for the lower credit rating companies, maybe access will be more important. Maybe in respect to the cost, there is no cost efficiency in respect to having guarantees, but will have broader access to the market. Enhancement allow them to have more access, right? So, with respect to the Sukuk Enhancement Fund, in which they should establish by themselves, contribute, become the owner, so that the question will be, what is the advantage compared to the just simply using the guarantees companies available in the market? And if it is a kind of cooperative mechanism in which members will have the same voice, what is the incentive of the higher credit ratings companies to involve together with the lower credit rating companies? So this is, I guess, some technicalities in the operation side, not in the conceptual side in respect to the enhancement needed by market. Without saying, I do understand some technicalities that rising the question from us, like Brother Ilmun also in very, very early presentation mentioning, for example, the Sukuk here in the model of the concept paper is, for example, implemented by amortization, not valid payment, for example, that is not common in respect to the bond or Sukuk issuance, for example. But I will not go to that very technical or detail, but I believe that some question I raise in respect to the applicability of the SEF need to be addressed by all of us. Yeah.
Thank you, Dr. Suminto. I think having those kind of very deliberate explanations and insight from one of the very respectable, prominent figure in the Ministry of Finance is something that we really appreciate. but we have follow-up questions to Dr. Suminto, but let's go back and forth and let's not lose the momentum. And now let's move on to Mr. Ijlal. And in respect to what has been articulated by Dr. Suminto, suppose this one is applicable. Do you think it will potentially help in terms of making the market more diversified as proclaimed by the paper or by the team of who structured the product? What is your thought on that, Mr. Adil? Faddal.
Bismillahirrahmanirrahim. Assalamu alaikum rahmatullahi wa barakatuh. Indeed, pleasure to be here, and I'm thankful to Institute for inviting me, Dr. Sami Suelem, and it was really honored to see Sheikh Ahmed Muhammad Ali. Really, he was a pioneer, and the organization I'm managing at the moment was his brainchild in developing the standards. We have two standards on the Sukuk documentation side. That's what we do, Ijara and also Mudaraba Tier 1. And so we have experience, we have in terms of research, a report also which we do annually, which some of you, most of you will know. And my sort of looking at this proposal, which is in the proposal form, because there are several things one has to see. I think the idea is good. It has to be further, like I mentioned, further maybe looked at and refined. What it is, it's kind of an independent fund. And when you talk about, the cost factor for the issuer, what really one has to understand it is basically if you are if there is no enhancement and the issuer is sort of a lower category in terms of rating, I'm sure you will cover, naturally the cost of issuing will be higher. So it means that you will be paying more premium. But if you are bringing in enhancement, that reduces basically your cost of issuing. So that's basically one element which is there because the contribution. And the contribution, if I understand correctly in the proposal, are two ways. One could be basically the issuers. So it's a primary market sort of a site you're developing. And then the other could be other contributors who want to be there and want to either support, the development of Sukuk, or want to see how it will, if there is, default factor is minimum, then how, they can sort of benefit also. And also sort of there is a, mechanism of some repayments also, what you're looking at. So in that respect, if you see, the idea is good. Of course, I think I was just thinking, then we have sort of two sort of element there. One is the element of restructuring, which we can see in some cases. That could be maybe you sort of, you will have need a documentation to cover that nobody can just make excuse that I am unable to pay the payments and just try to, take advantage of, the fund it been there. So you sort of put in some conditions that how you will do it. Maybe you can put in sort of number of installments, maybe you will cover, maybe you limit that. You give time that, okay, if something happened, you have time to really revive the project issues. So I think these are sort of things you have to see. Or it could be the full sort of a default situation which you see. Other thing which sort of, you mentioned the type of sukuks. And we have, of course, structure-wise could be the same, the structure. But you have payment, bullet payment sukuks, which are naturally credit-wise are more risky. And you have, sukuk, which can be, I think encouragement can be made for sukuk based on amortization. And there are few sort of sukuk which were issued on amortization basis. One was, if I recall correctly, is 2013 by Emirates Airline. It was a big size sukuk of $1 billion, and it was amortized 10-year sukuk for 5 years, and it had the pricing of, at that time, 300 basis point over mid-swap. So that example is there. Then in Malaysia, you have Kagamas, which is a mortgage, and the lender which issues regular sukuks. So they have good issuances there, and they also in their plan, since many years issue this amortization sukuk. I don't know how many they've issued. So, and you have now in various sort of countries, the mortgage market is developing. So that is also, I think one can see, you have Saudi Arabia, which, there is a huge mortgage demand and market developing here also. In other countries, in Africa also you will have. So I think you can sort of look at, these sort of, areas where you can sort of focus and develop and bring in this sort of concept there. And it sort of can probably, work out and you develop it, in a way, in an orderly manner. So that's definitely there. Of course, I will not cover the rating side and how that will work, what we discussed previously. So these are some of the things which I think would be sort of one has to see and address as we sort of go along, inshallah, on this idea. So this is for now, but inshallah, I will try to also.
Thank you so much, Mr. Ijal. I think it's been very useful for the improving some of the technicalities, but particularly on the aspect of how to make this thing applicable. But let's stop it for the time being. But then let's move on to.
And you have some, I think, done a very. Sorry, I'm interrupting, but you have done some very, analysis also. Monte Carlo model. I think also you have sort of, tried to apply. So these kind of things, as you develop. Naturally, one can sort of look into it, how you're coming out with that kind of return. I think for the fund, it's something which one has to really also see. So that is also there in your sort of proposal.
Yeah. Sister Sabine, let's start with a very general question. Having been in the industry for quite some time, and particularly you look at it from the rating perspective. The first question, or 1A, is probably what is your first or general impression when you were presented this kind of idea, and how do you look at it from the rating perspective?
Assalamu alaikum, everyone. Thank you very much for letting me be part of this discussion. I first saw it, as you may recall, somewhere in August, September, and since then I think there has been further evolution in the thought process. And my first thought was that obviously, we've said this way too many times that, again, these are unprecedented times in terms of uncertainty. Credit risks are very high. We're looking at low economic growth. We're looking at very high inflation. So the confluence puts one thing center stage, and that is rising credit risk. So while our member countries were never really strong in that department anyway, but at this time, even some of the stronger ones are facing challenges in terms of increasing or loss of credit worthiness. So I think this discussion is very timely. And when we talk about risk mitigants, a new type of risk mitigants, it's a very welcome discussion, because I particularly like the fact that it is somewhat atypical in its design. So we've looked at guarantees, we've looked at full-fledged guarantees, we've looked at partial guarantees, we've looked at credit insurance, meaning financing takaful of all forms. But this is new because it kind of takes elements from all of these risk mitigants and combines it in a way that changes some of its effects. It cannot be looked at as a one-shot guarantee, because the strength of the fund develops over time. It builds over time. So it's not like one guarantor issuing a guarantee. And in the same respect, it's also not like insurance. Of course, there is the introduction of new stakeholders like capital providers. So that also makes it very different. It makes, I think, a very valiant attempt at protecting the credit risk of the fund itself. But I also completely agree with what was said by our honorable fellow panelists, that the credit risk will also be a function of the quality of the issues that the fund will cover. So there will be some of those real-life elements which will come into play. Nevertheless, I think a lot of the questions that would arise in the minds of an investor or a participant, a market player, I think many of those questions have been answered in the very detailed concept paper. So that was my first thought. I also went through many of the workings and the assumptions, And the one thing that I think I would like to perhaps say at the outset is that, you know, there are some new risks which will be introduced when the fund is actually put into effect, inshallah, and when it comes into play, when it comes into the market. However, there are some mitigants which are embedded that you have actually narrated towards the end of the paper a number of times. That some of the things like, you know, dividends going back to the issuers, that changes the equation of cost and benefit for the issuer in a manner that makes it actually very palatable for the issuer as well. I think that the fundamental assumption that, you know, market risk premium and the amount of protection offered are proportional to each other or are symmetrical, there is a real life problem there, because it's not like 40% protection will result in 40% you know, cut in market premium. And also the reaction of market premium to ratings varies at every level of the rating. It varies depending on market circumstances, like the amount of market premium that each rating, for instance, at lower bands, the market premium from one notch to another is very large, but at higher bands, that market premium narrows quite substantially. So because ratings also do not, I mean, in terms of their relationship with market premium, they also do not move symmetrically. That does include a complication in the working of the amount of risk mitigation that investors will get. And that is why I think, you know, those are things that can be further discussed. However, as I said, that, you know, investors and capital providers both have a way of covering for their risk. You know, I mean, this is what their game is, that they will make sure that if you're giving them this much protection, they will price it accurately. The markets are deep enough, they're well developed enough for investors to be able to price the level of risk and the level of risk mitigation. So I think investors will take care of themselves and capital providers will take care of themselves. The thing is that the cost to the issuer might not be reduced proportionally to the credit protection that they will get, but when we feature in the effect of dividends coming in, that significantly improves the equation for the issuer as well. So I think that is a very fundamental major strength over and above a one-shot guarantee, or even takaful. Of course, takaful also has the concept of giving back, distributing the surplus, but I think that in a very different way, and also by bringing in capital providers, I think it does plug in many of the gaps that I see will come in real life situation. It does plug them in, but a lot will depend on how the fund eventually evolves in terms of, I mean, you've mentioned that of course there will be a screening process. Who will be covered? What will be covered? Will be the real dimension. That will give a perspective to the fund. And that, I think, will be key to defining. For instance, if you know, the composition of the fund eventually turns out to be, you know, the collective risk profile is, let's say, X, you know, eventually the default probabilities will have to be stressed on that collective risk level that you eventually get once you've put together all the members and once you've put together all the issues that you're covering. Certain types of financing, like project finance, might not lend itself very well to this kind of protection because, you know, it is based on a project actually coming up. So this will give us temporary protection for some time, but for projects which you know, are bullet payment or you know, projects which are dependent on financing which is dependent on a particular project, they might not lend themselves. So depending on who gets covered and what gets covered, I think the risk profile could change accordingly. It does lend a certain amount of uncertainty to our evaluation. So these are my initial thoughts.
Yeah. And on that note, if I'm allowed to go back to Mr. Ijlal, you know, to what extent then, if suppose it is there, it will potentially help in the more diversified and more liquid sukuk market. I mean, since you are one of the persons in the industry who has been very much hands-on, recently there was a ijara, it's standardization of ijara sukuk. So how, to what extent it will help, potentially help in the more diversified?
Thank you, and thank you for the introduction also. Yeah, I think if you look at it, first, if you have to see the role of takaful. Naturally, the sukuk sizes are not really, they can insure the sukuk. That's, something which is not possible. It's totally different sort of a mechanism for takaful. Or if you bring in insurance, that cannot be done, for sure we know. So I think what you have to see, in my view, is starting point would be, when you're saying the contributions, what is the minimum, number of issuers you want to bring in? From where it will start? I think that's the key, because you cannot have one issuer and that's also trying to contribute because it's sort of pricing, it has advantage, so it's basically, it's happy to, join. But you have to see, your starting point. How many, I think it was maybe 30 number was mentioned, something. So you have to see, your starting point, where you're starting, how many issuers you want to bring in. And actually, rightly mentioned, if you have, for example, project financing sukuks, which are very different, and there are huge requirements for project financing, but those are different types. And we have seen project financing, generally, there is a restructuring element there. Project delays, projects, people who are involved, they will tell you that these are sort of a very common things. When we are looking at now syndication documentation, one thing was mentioned that try to address the issue of, rescheduling, because that's something very common in project financing. So probably it would be, better to basically start with smaller sukuk, denominations, lower category, issuers. We want to help, who are unable to, issue sukuk, and also bring in some sort of, if I may call it, supporters who want to basically contribute and have, to develop the market. And also, there is some, protection level for them, of course, is there. But of course, it depends. Well, you have this one affair, many, sukuk ran into trouble and all, you have to see. So it's the whole sort of exercise. So I think the starting point is critical when you do it. How many sort of, what it will be your starting point. Most likely your smaller, base or smaller sort of, entities, which, we'd like to bring in. And also you see maybe in the domestic level, initially, there are a lot of opportunities there, which can be, developed. So that's, I think, what's probably you were, alluding to. So I hope I've provided you that sort of, the audience that, what I think could be likely possibility, inshallah.
Thank you. Let me go back to Dr. Suminto. As one of the, if I can use the word, masterminds of sukuk issuance in Indonesia, in your experience, and you seem to be of the view that it may not make any sense to implement the sukuk enhancement fund on the sovereign level, but perhaps there is a potential in terms of implementation on the corporate level. And in learning from our previous discussion with the Ministry of Finance and the Financial Services Authority, as well as Central Bank of Indonesia a few months back, and there was a quite interesting remark that suppose this sukuk enhancement fund is in place in the Islamic capital market in Indonesia, it will eventually help enhance the proportion of what they call as the financial intermediation ratio. Because apparently, correct me if I'm wrong, the volume of the corporate sukuk in Indonesia is somewhat not comparable to the sovereign sukuk. So how do you see those things? If it is in place, how much it will sort of impact or become a game changer in respect to the, bolstering the proportion of the financial intermediation ratio in the context of Indonesia?
Yeah. Back to what I have mentioned earlier, that yes, enhancement is very much important as a part of market infrastructure needed by all of us to develop sukuk market, especially the corporate ones. But back to the very technicalities and respect to the conception, and I can add what is our brother Ijal mentioning. I'm not a legal person, but I have a question in respect to the legal aspect of this scheme. In which one of the key elements of the credibility of the fund established will be the clarity if there is something happens. Brother Hilman mentioning the event of deficit, for example. If it is a kind of cooperative mechanism in which members contributing and maybe also supported by the capital providers, how we could provide assurance and confidence to the investors that if something happens, the event of default happens, and then the fund have capacity to realize their obligation, the guarantees provided. So in the scenario of deficit, then how we will recover? It will depend on the legal status, institutional setting of this fund. What is the legal standing of this fund? If it is limited companies, of course, will be different with cooperatives, will be different with trustee and so forth. So that clarifying the legal status of this fund is also important, and it will be depend on the structure of the governance structure of the fund itself as well. So once again, the issue is not whether we need or not enhancement mechanism. I do believe we need it. It is an important element of the market infrastructure we need, but the question back to the applicability. So of course, if we are discussing the regular guarantees mechanism that is very normal in the market, and all of us will say that we need it, right? So back to this scheme, the question will be many questions have been listed, but of course we appreciate very much the initiative and also the concept notes. I do believe that the issue is how to refine it to address some concern, some remaining issue, especially in respect to exercising the applicability of this scheme. So if the question how this could contribute to the market, including in developing the sukuk market in Indonesia, yes, we need the enhancement scheme, but in respect to the mechanism and the scheme itself, of course, we should further exercise the proposal provided by the institute.
Thank you, Brother Ajil.
Sorry, I don't want to take too much, but I think a very, good question, and it has to be, in my humble opinion, a very independent sort of institution. It cannot be like SPV, as we know in Sukuk you have SPV. These are orphan SPVs, generally controlled by the issuer or the obligor, and that's how the Sukuks are generally structured, as we know. But in this case, it has to be definitely a separate entity, very sort of independent, and I don't think so how it will be done, but the influence of issuers, although they're contributing, but it cannot be such that they can really, that's why I said, to have that sort of a documentation, that what could be sort of, situations when they can really approach the fund is critical also. It cannot be very simple that, you just send a letter and say, these installments are no more. So that's very, in my view, it has to be done in a manner that is an independent body. And then later on, maybe how you develop it, how, financially, when you're starting with some base strong, then it could be, maybe rated also. possible. I don't know. That's something you can see, and bring in. So the entity itself, the fund, it's been created. It's eventually, it could be, maybe not in the starting point. I think anything you start, I think rating agency do it after 3 years maybe of operations or something like that. So that's something which you sort of have to see in my view.
And perhaps Sister Sabine, we would like to ask you, was there anything, any key components that we inadvertently overlook in the process of our analytical investigation in structuring the CEF, in your opinion? After going through quite,
I wouldn't say overlooked. As I said when I was speaking earlier, that I think a lot of the questions that would be raised have in some ways been addressed. But I think what I would perhaps like to be able to work out is also, like we talked about the effect of capital providers, we talked about the fact that dividends are there and the fact that we're withholding dividends, and they will also build the resilience of the fund. So, when the rating agencies look at the fund's risk profile, they will look at the credit risk that is from the members. They will also look at the members' risk profile in terms of, what could be the potential total default. But they would also look at some other risks of the fund, like their availability of liquidity at X point of time. Plus, they will look at, what mechanisms are in place to recover from, because when a default happens, that doesn't mean that there is a default. There's a PD concept, the probability of default concept, and then there's an ECL concept, the expected loss that comes after PD. So just because there's default doesn't mean it's total loss, which means that you have potential for recovery. That is a factor that needs to be given importance, perhaps not worked out because it's not a specific amount that can be done. But dividends particularly is something which goes back to the issuer and should be built into his risk and reward equation. So that is something that if it is built in, I think it will change the risk reward equation for the issuer. I also think that as I said before, that one of my key, as a rating agency, I think it's important for me to highlight this point, that, and I've already said this actually, but at the cost of repeating myself, that the relationship between rating and market risk premium is not linear across the rating scale, and the relationship between extent of protection and reduction in market premium is therefore also not linear. So I think that is an important component which complicates the situation somewhat.
Sister Sabine, Mr. Ijlal and Dr. Suminto, we cannot be more delighted to have you here, and thank you so much for your very constructive comments. And I think we have gone through the global forum with, inshallah, full of barakah, because we were so much concerned with the time constraints because we might miss the Jum'ah prayer, but thank God we made it, and we still have time for Jum'ah prayer. And alhamdulillah, again, thank you so much. We cannot be more grateful for your contributions. Thank you so much. Let's give a round of applause to our panel experts. With that, we end our second panel on the Sukuk Enhancement Fund, and as mentioned on the screen, you are very welcome to give more feedback, constructive comments for the further improvement of our Sukuk Enhancement Fund concept. And with that, we end our panel 2, and we give back to our able MC, Brother Yahya. Fadal.
Thank you, Brother Hilmun, and thank you, Dr. Suminto, Brother Ijlal, Sister Sabine, thank you. And I think it was a good session in the sense that it validated the concept, but it highlighted some very critical aspects that need to be taken care of as we go in terms of refining the concept and bringing into something which is very practical and robust and applicable. So once again, thank you very much. And maybe you wish to have a group photo, Brother Ilmun, with the panelists. Can we get the... want to take. Okay. Thank you. Thank you very much. And okay. This brings us to the final closing of this global forum. I'd like to thank everyone, and just to inform everyone that there is arrangements for Jumu'ah on the first floor, so please do not be concerned. And inshallah, once again, thank you very much, and have a rest of a good remaining days of the annual meeting. Thank you very much. Assalamu alaikum.
Center of one of the most magnificent civilizations on the face of the earth that has inspired millions of people all over the world, from where vision and perseverance have turned dunes of sand into an iconic land of productivity and modernity. The Kingdom of Saudi Arabia, the birthplace and headquarters country of the Islamic Development Bank, is actively supporting ISDB in inviting ministers, policymakers, economy and finance leaders of its 57 member countries, as well as private sector chiefs, international development players and global partners for the 2023 ISDB Group Annual Meetings in the iconic city of Jeddah. Under the patronage of the custodian of the two holy mosques, King Salman bin Abdulaziz Al Saud, for yet another exhilarating high-profile assembly at a crucial moment when multifaceted crises are looming. An assembly that builds on the collective will to spearhead homegrown and climate-friendly progress, sets the stage for a more resilient and sustainable development, and forges lasting partnerships that fend off crises. To lead partnerships that pace up the move towards the UN Sustainable Development Goals, to better manage the present and better sustain the future for all. Join us in person and online for 4 days of proactive deliberations at the 2023 Islamic Development Bank Group Annual Meetings. From the center of one of the most magnificent civilizations on the face of the earth, that has inspired millions of people all over the world, from where vision and perseverance have turned dunes of sand into an iconic land of productivity and modernity. The Kingdom of Saudi Arabia, the birthplace and headquarters country of the Islamic Development Bank, is actively supporting ISDB in inviting ministers, policymakers, economy and finance leaders of its 57 member countries, as well as private sector chiefs, international development players and global partners for the 2023 ISDB Group Annual Meetings in the iconic city of Jeddah. Under the patronage of the custodian of the two holy mosques, King Salman bin Abdulaziz Al Saud, for yet another exhilarating high-profile assembly at a crucial moment where multifaceted crises are looming. An assembly that builds on the collective will to spearhead homegrown and climate-friendly progress sets the stage for a more resilient and sustainable development and forges lasting partnerships that fend off crises. To lead partnerships that pace up the move towards the UN Sustainable Development Goals, to better manage the present and better sustain the future for all. Join us in person and online for 4 days of proactive deliberations at the 2023 Islamic Development Bank Group Annual Meetings.